Hello guys, welcome to yet another YouTube video from the Let's Trade community. It's nice having you back here on this channel. Today we are going to be talking about how to trade the news release. As you already know, there are different types of analysis in the forex market. We have the fundamental analysis and we have the technical analysis. Now, what are the difference between technical and fundamental analysis? As a matter of fact, we have a third one, which is sentimental analysis, but we are just going to push sentimental analysis aside because I really don't believe in sentimental analysis. So we are going to focus on fundamental analysis and technical analysis, right? Now, technical analysis is you looking at your chart, right? We believe, a technical analyst believes everything that happens in the forex market is reflected on our chart, right? So that's the belief of technical analyst. Then a fundamental analyst understands the economic situation of a certain country, gauge their economic situation through their news releases, whether be it unemployment rate, interest rate, the GDP, the consumer price index, all those big news events, right? A fundamental analyst tends to want to understand the economic situation of that particular country to be able to trade the currency pair, right? Or to trade in that particular currency. So let's assume an investor that is interested in the GBP, which is the British pounds, will always want to know what is happening in England, right? Then a trader that is interested in the euro wants to know what happens in the eurozone, right? And a trader that is interested in the US dollar wants to know what is happening in the United States of America. But today we are not going to jump or dive deep into all of that, right? We are here to talk about how do we trade the fundamentals, how do we trade major news events, right? And me, I consider myself to be a 95% technical analyst. Then the remaining 5% is just to look at what is happening in these economies out there, right? Which is the news events and all of those, right? So as a technical analyst, the first thing I do, I want to come into my chart and look at what is happening, right? How can I determine trend? Fundamental analysis is not going to tell me the trend of the market, right? Fundamental analysis is not going to tell me, okay, the market is trending up or the market is trending down or the market is ranging, right? Fundamental analysis is not going to tell me all of this, right? So I need to come to my technical analysis, which is come to my chart, look at price action, then to be able to see if I can get trading opportunities for the big news events coming up. And how do we do that? First, you need to understand the concept of what market structure. I've not talked about market structure on this channel. Maybe I'll do that in the nearest future. But before then, let's focus on the task at hand. First of all, you need to understand the concept of market structure. You need to understand the way price behaves. You need to understand price action, right? Now, what is market structure? Market structure tells you when to buy or when to sell or when to sit on the sidelines. Market structure tells you if we're in a trending market or if we are in a ranging market or if we are in a choppy market, right? And when we talk about a trending markets can either be trending up, making higher highs and higher lows, or trending downwards, making lower highs and lower lows, right? In this manner, right? So that's how you know if a market is trending or not. While a ranging market actually moves sideways like this to the right, okay? This is what a trending market does, right? So first of all, to be able to trade the news events from a technical perspective, you need to understand the concept of price action. And this is what I use in trading news events, and I am right 9 out of 10 times. I am right 90% of the time. And when you are right 90% of the time, it keeps you in profit, right? And profit is all we crave for in this game, right? So without further ado, let's quickly dive a little bit into market structure, because if you understand the concept of market structure, you'll be able to do or dissect the you'll be able to do or trade the news events properly, right? Now let's look at the trending market structure first, starting with the bullish market structure, bullish. Then let's put bearish here. I'm sorry guys, my service has been very poor lately. That's why you see my screen going on and off. So this will be bullish, BU for bullish, BE for bearish. Okay, sorry, this is not break even for this. What you see here is bearish. Okay, so now in a bullish market, you want to see price creating what? Higher highs and higher lows, then also creating new higher highs and new lower lows in that order, right? So let's say the market is trending upward. We create a high here, then we come here, create a higher low. We don't want to close below here. We don't want to come below and close below this previous structure here, because if we come and close below this structure here, then we should be looking for some kind of pullback then to sell, because now we've created a new lower low if that happens, right? But now we're talking about a bullish scenario, so you want to constantly create highs, higher lows, then a new higher high, breaking above this structure, then for market to what? Pull back into that structure and then give us another buying opportunity, right? Breaking above this previous structure again. Oh my goodness, my service is messing with me. Then we expect price to create a new higher high, breaking above this structure, then for price to also come back into that level again, then give us another buying opportunity, right? Breaking above this previous structure. Okay, now the market being what it is, this doesn't happen 100% of the time. If not, we'll all be millionaires, right? We'll understand that, okay, this is how the market moves and we're always going to trade like that. So sometimes, instead of us to come back into this structure and then bounce off, sometimes we tend to come down below to this level here, right? And if we come below this level, provided we don't come and close below here, creating a new lower low, if we don't do this, then we are still in an uptrend. But if this happens, if we've broken below the previous higher low, that means we should start looking for selling opportunities. But since that is yet to happen, if we come into this structure, even if we don't reverse at this structure, if we come into this structure and then bounce off, we are still in an uptrending market, right? Because this to me is an equal low, which also double up as a double bottom scenario, right? Which is an attribute of a bullish trending market, right? Now in a bearish scenario, we want to be seen, we want to flip this the other way around. So we want to be coming from the upside like this, creating a new low, then a lower high, then a lower low, breaking this previous low here, right? Then we expect for price to come into this zone and to pull back. Some people call it pullback, because some people call it retracement, whatever you call it, you're right. Come back into this zone, then push down and create a new lower low, right? Then in that order again, we want price to come back into this structure. Price can come back into the structure or go back to this previous structural level here. Don't mind my lines, guys, not accurate, but you know what I mean, right? Price can come back into this zone and also still push down, right? That is still a bearish trend, because we failed to create a higher high, right? If price should come above here, then breaking above here, we've created a new higher high. So what we'll be expecting next is for price to pull back into this zone and continue upward, right? Now we've changed from a bearish trend to a bullish trend that way. But if we reverse from here, right, that means we are still in an active bearish trend. Now with this in mind, understanding the market structure that you are currently in, you want to continue that trend. You don't want to go against the trend. Trading against the trend is a recipe for disaster, right? It's a recipe for you to blow your hard-earned money, and you don't want that to happen, right? So now you want to trade in the trend of the market, right? When you see a market structure like this creating equal highs and equal low, as a matter of fact, a trending market, when you create two equal highs or two equal lows, then you have to do what? At that point, you plot your support and resistance level. Once you get two higher highs and two lower lows, right? Two highs and two lows, then it's might be in for a ranging market. Then you want to see what price does when it comes back to this low again. If it bounces off, you want to see what it does here. If it bounces off, then you establish that okay, we are in a ranging market, right? Okay, now that you've understood the concept of market structure, let's go look at this. Does this happen in the real world? Does this happen on our chart? Let's go find out. Now, as a technical analyst, to determine the overall direction of a trend, I always advise that the first thing you should do is to go to the highest time frame, which is the monthly time frame. That way you want to see the direction of the market. That way you want to know if the market is in an uptrend or if the market is in a downtrend. You want to know if you should be buying or you should be selling, right? So how else do you determine that? You go to your Google Maps. By your Google Maps, I mean, I'm not saying you should go to your Android phone and enter Google Maps. No, that's not what I'm talking about. Okay, all I'm telling you to do is to do what? Go to the higher time frame of any commodity you want to trade to establish what the direction of the market. You want to know if market is creating lower lows and lower highs, or higher lows and higher highs, or the market is moving sideways in a range, right? And now we're looking at this chart. This is the monthly chart. With my analysis, the analysis I made earlier, you can easily tell that this is a downtrending market because we are making constant lower highs, as you can see here. Constant lower highs, constant lower highs, lower high, lower high, right? And of course, we are also making lower lows, right? Lower lows, lower lows. So this is a downtrending market. You need no one to tell you anything else. So in this kind of market, what do you want to be looking for? To play safe, what should you be looking for? You should be looking for what? Bearish trading opportunities. We're looking at even the candlesticks. You see that the bullish candlesticks are smaller, the bearish candlesticks are larger, right? Then the numbers of the bullish candlesticks also are fewer, while the numbers of the bearish candlesticks are more, right? So that tells you that okay, we are in a downtrending market. Now, looking at the previous month, remember this is a monthly chart. Now, looking at the previous monthly candlestick, which is here, you can tell that we closed bearish for the previous month because this is a new month. I forgot to tell you guys, happy new month, guys. I wish you a peaceful month. I wish you a blue month, right? I'm sorry if this video is becoming too lengthy, but I don't know how else to explain this to you if I don't go into every little details. As it stands, I'm not even touching every details, right? I'm even trying to summarize and make this video as short as possible for you guys, right? But I must tell you something, guys. You need to invest if you want to be successful in this game. So don't look at the amount of that, don't look at your time. You need to give time to understand this. I mean, this is a business, right? So you need time to learn it. Forex is not a gamble. Forex is a business. So you need to give it all the time in the world to master it, right? So let's continue. Now, this is the monthly time. We've established that this is a bearish trend. So we'll go to our weekly time frame. On the weekly time frame is where you plot your key levels. I'm not going to go into all of that details right now. I believe most of you watching this video understand what key level means, right? Key level is a zone where price has failed to break either above or below it. Just like here, price failed to break above this zone. When we had this downtrend, we went back into that zone. Price repeated the same thing, failed to break above it. As a matter of fact, it gave us a double top and we've been collapsing ever since then, right? And now you've established that this is a downtrend on the monthly and the weekly time frame. Let's go to the daily time frame. Okay, now here we are in the daily time frame. Remember, the monthly time frame is to give you the overall direction of the trend. You scale to the weekly time frame to plot your key levels. Then you come to the daily time frame. On the daily time frame, you get to see price action, right? You tend to see the wave of the market clearly, right? So when you don't trade on these higher time frames, don't get me wrong, you don't trade on these higher time frames. You definitely go to the lower time frames, which for me is the 4-hour and the 1-hour time frame, to look for entry opportunities, right? When you see price on the higher time frame go into an area of interest, you come to the lower time frame to look for that breakout. You look for that breakout to trade in the direction of the market. That is the most realistic way to what? Trade the forex market. Now on this daily time frame, if you have an eagle eye like me, what I demonstrated down below before we came to this slide with my markings, lower lows and lower highs, when I was explaining market structure, you can see that in play here, right? Let me actually even draw that out for you. The market has been collapsing from the upside to the downside here, right? Creating a new low. Then we went back into this zone, right, creating a lower high. As you can see, price didn't go and close above this previous structure here, so we came to this structure. Then what happened next? We created a new lower low here, breaking below this structure here, right? We created a new lower low, right? So as a matter of fact, we're supposed to come back into this zone, but that didn't happen. Just like I explained in the previous slide, we went back, failed to break above here. If we had broken above here, we would have started looking for buying opportunities, but we didn't break above this market structure. As a matter of fact, we created equal highs, which is still an attribute of a downtrending market. So what happened next? Market pushed back from there, breaking below the previous low, right? Now market came into this zone, then came back to this previous zone here, right, and bounced off it, creating something like a new lower low here, breaking below this low, right? Then what happened next? Price came back here, then shot all the way to the downside here, breaking below these lows, right? Then went back into this zone, which is this previous low, right? And market price rejected it, but we failed to create a new lower low, right? So at this point, I was even actually looking at, oh, cool, can we, is it that we are in for a reversal? So I was sitting on my hands, of course, as usual. I don't buy in the selling market. I don't do that. Some people have mastered that art, but for me, I like to keep things simple and easy for me. I want to trade and go have fun, go chat with my friends, go have fun with my family and all of that. So I don't buy in a bear until we create a new higher high. If we created a new higher high, then I'll be waiting for a pullback into this structure to do or look for buying opportunities. But that didn't happen. As a matter of fact, we created a new lower low and we started collapsing to the downside, and this time we broke below this previous market structure here, right? And when that happened, what did we do? We went back into that market structure again to retest it and shoot down to the downside. In fact, we've created a tiny little lower low, but I'm thinking in my own analysis, this market should come to this downside, and that is what I'm hoping the NFP tomorrow will do to the market, right? To push market downward. Now we've established that we're in a bearish market. Now I'm going to quickly do something so that I'll make this more, so that I can understand what I was talking about in the previous slide when I was doing those black markings, so that you can understand how this happened in the real world. Now if you look at all these places that markets actually came into before creating a new lower low, you can see that after creating that new lower low, price, after creating the new lower low here, price went back into that previous market structure, right? Just like I showed you while I was doing the drawings. Then what happened? After creating a new lower low here, what did you notice? Did price go back into that market structure? Yes, it did, right? And what happened? Price bounced off there. Now, after this market structure, we created a new, after breaking this market structure, we came into this zone to create a new lower low, right? And after creating this new lower low, I'm sorry guys, so after creating this new lower low, price blasted through it, right? And what happened when price blasted through it? When we created this new lower low here, what happened? Did price go back into the previous market structure? Yes, it did. And now we created, do you see how clean and how easy it is to trade? So now you already know that, okay, when price got into this zone, you needed to do your plot your selling opportunities and what trade in the direction of the market, right? And this is where Fibonacci tool is very, very important, because if I pull up our Fibonacci tool, you see that price actually reacted nicely to those important Fibonacci levels, right? This is a swing high, then this is a swing low. I'm not going to talk about how to plot Fibonacci level in this video. Then what happened? The key levels in our Fibonacci series is the 0.38 level, 0.5 level, and the 0.61 level, of course, and the 0.78 level, right? Now price came into this structure and it confluenced with the what? 0.5, is it the 0.5? Or sorry, the 0.6 fib level, and price rejected it. But let me not bore you with all those details. I don't want this video to be too lengthy, if it's not even already too lengthy as it stands. But stick with me, try to watch this video to the end so that you can add at least value to what you already know. Now, how do we trade the news? Now that we've understood the overall flow of the market on the higher time frame, started from the monthly down to the weekly and down to the daily, now we've understood the what we now have a general idea of what the market is doing, right? So here I'm not looking for a new higher high right now. All I'm looking for is a new what? Lower low, right? So now you go to your 4-hour time frame to look for entry reasons. Why do you go down to the 4-hour time frame? Now that I know the trend, I need to go there to look for entry opportunities. And one thing I must let you guys know is, if my technical analysis don't give me an entry reason to trade the news, I will not trade that news. I will not trade the news. Why should I don't want to lose money. So I need an entry reason. I don't just want to see long candlesticks after the news release and I'll be like, oh, we're going up, I want to buy. Or no, we're going down, I want to sell. I'm expecting a sell in this after this news release. That's what I'm expecting, and that's what I'm going to be looking for. If the news comes out and will go bullish, so be it. I'm not trading it. I'm off the market, right? Congratulations to those that are going to catch, that are going to make money. But for me, I'm going to be on the sidelines because I want my technicals to align with my fundamental, right? Now, coming to the 4-hour time frame, on the higher time frame, we've established that, okay, we're in a downtrending market. So all these things, as you can see, I'll just call it a huge consolidation. I'll call it the market taking shape in preparation for the news release. Now, I see many people on different chat forums calling eurusd buy. For me, I'm bearish. And when you know the direction of the market, when you anticipate the direction of the market in your heart using market structure, it will be difficult for you to lose. Because if you trade against the trend, yes, you might catch this 500 pips here, you might catch this 100 pips here, but you tend to give it back to the market. It happens all the time. I used to be that kind of trader. So you tend to give back that money to the market because you can't be doing the wrong thing all the time and be profitable over time. No, that won't happen. You have to keep doing the right thing all the time to be profitable over time. So that's how the forex market works. I'll take it again. You can't be doing the wrong thing in the forex market. You can be successful today, tomorrow, in fact, for the whole month. But because you are doing the wrong thing, you over time, over a large period of time, you are going to be a losing trader. But if you stick to the right things over a long period of time, you are going to be a profitable trader that way. Now that we've established the direction of the market, let's go to the 4 hours because let's go to the 1 hour because this 4 hours is not opening up the charts the way I want it to. So I'll go to the 1 hour. So as you can see, I'm already preparing for the news release, right? I was expecting a lower low, which of course, like I said, we've gotten looking left. I'm sorry, let's give it a second for my chart to load up. Price is actually here. It's because of the service we are not it's not loading up. My goodness. As you can see, this is where the disconnection is coming from. Anyways, price is here, then we shot up, then came back and created a new lower low. I'm sorry that my service is messing up with me today. So you can see price here, then we shot up, we came back down, created a new lower low, but I wanted a more pronounced lower low. I can't regard this as a proper word, lower low. So that is why on the lower time frames we are having this little pullbacks, right? Remember last month has closed as what, a bearish candle. So, and we're in an overall downtrend, and daily is giving us, daily is constantly creating lower highs and lower lows, right? So now in preparation for the news release, even on the lower time frames, you will discover that we are not creating any higher highs. So to me, there is no trend change yet, right? This is a high here. We failed to break this high ever since we created this lower low. We failed to break above this high. If we are broken above this high, then maybe we are in for a little bit of pullback on the higher time frame. But on even on the lower time frame, which is the 1 hour time frame, if I zoom out a bit, it's why we've not created a new higher high. Aside this zone that created this new higher high, ever since we've been creating lower lows. Because if I pull my trend line, you can see that this is still a bearish scenario. Yeah, I'm sorry guys, my service is not cooperating with me today. So we failed to break above this high, as you can see here. So why are you going to say this is a bullish trend? No, not me. The other traders can say that, but not me. I'll call this a bullish trend when it is actually a bullish trend, when it has actually played out. But for now, I've not seen that, so I'm not calling this a bullish trend. Now, in preparation for the NFP, I've plotted my counter trend line. This is how I trade in news. Now, I've plotted my counter trend line, and I hope and pray that we continue ranging today. If we keep ranging above this trend line, that would be so perfect for me. Oh my goodness. Or let's say we break below today. Let's even say we break below today or before the NFP. I would like to see price break below and be below this trend line in form of a retest, so that when the NFP is approaching, I can place my sell trade. So that would be me trading trend line break and retest what strategy. Okay, so that is what I am hoping and praying for. So this is how I trade the news. Sometimes if I'll be away from my system, I'll place my pending order just below the trend line. I'll place a pending order here, right? I'll place a pending order here like this. Okay, with the hope that, okay, when the news comes out and we blast below the trend line, it will take my sell order and will keep bleeding what to the downside. Okay, so this is how I trade the news. So you can replicate this on the other currency pairs. Like for me, I trade only the majors, right? So you can replicate this across the other thing. Determine the direction of the trend, come to the lower time frame before the news release. Before the news release, we tend to have some kind of floppy movement in the market, like sideways movement, just like you can see in the Euro USD here. I think we're experiencing something like that also on what the GBP USD, and much more also on the AUD USD. So for the NFP, the currency pairs I'm looking at is the Euro USD and the AUD USD. This video is getting too lengthy already, so I won't go into that showing you all my charts. We are going to do the weekly outlook for next week, and maybe I'm going to dissect the charts afresh again. But this is basically how I trade the news, guys. I don't just trade only the news. I allow my technicals give me an entry reason. If I don't get the entry reason, then I sit out of the market. I don't want to lose my money. You need to understand that I manage significant amount of money for investors, and I don't want to start telling them stories that touches the heart, right? So with this, we've come to an end of this video. If you have any question, guys, please use the comment section below. And please, again, I can't ask you enough, guys, if you are yet to subscribe to this channel, do that, right? Because this kind of information, you want to do what? Use them. And if I post this video, let's assume, okay, I forget to notify you guys on the Telegram channel, you might not know what is going on and you just miss out on all these opportunities. So guys, I love you guys, and if you, once again, if you know you love the contents we make here, kindly subscribe, turn on post notification, and let God use you. So let's hope that we make all these peeps after the NFP release, and you guys should feel free to post your profits in the channel. Let's celebrate this together. It's the weekend, right? After the NFP, it's the weekend, so let's try to always withdraw. I do that all the time. Withdraw, go have fun with your peeps, have fun with your spouse, have fun with your family. Right now, with this, we've come to an end of this video. One more time, subscribe, turn on post notification. I love you guys. Peace out. Bye.